Thank you, Romaine. I want to get back to some of the headlines that we're getting out of FedEx here. Of course, just to recap, top line revenue actually comes in a little bit light relative to expectations, but this is a company that more than makes up for it down at the bottom line. And also, as you're seeing, fourth quarter adjusted operating margins come in at 9.2%. You're looking at CapEx spending coming in line at about 6.8%. That revenue number I had mentioned, about $24.4 billion versus estimates of $24.57 billion. But again, sort of the bottom line more than making up for it, continuing sort of out in that full year guidance in 2023 numbers as well. I want to do all of this and more with our very own Bloomberg News correspondent Thomas Black. And what are you sort of taking away about the pricing power that this company has?
It looks like they still have some pricing power. They did call out a little bit slower growth, so that might be in doubt going forward as some of the consumption patterns resume pre-pandemic patterns. So people are expending more on services and entertainment and less on ordering stuff from Amazon or other companies to be brought to their homes. So that growth is slowing a little bit, which probably portends that they're going to have a tougher time raising prices going forward.
Well, talk to us about their mix, their product mix or services mix, whatever you want to call it here, Thomas, because we know kind of during the pandemic, there was that big shift to really sort of embrace these home deliveries and these consumer deliveries. And there was a big cost associated with that. The idea that delivering to a home is much more expensive than just delivering to one or two gigantic businesses here. Did they shift enough here to maybe maintain a balance, or did they shift too far?
I think that's a structural shift. We're seeing the home delivery, the residential delivery grow faster than business packages, and that's here to stay. So they're going to have to face that going forward, that business mix is going to continue to trend toward residential. So they're working to try to get those costs down. And that's why they put out some guidance for this year that's a little bit above what the market was looking for. I think some of that is going to be a little bit lower CapEx and a lot of what they call revenue quality, in which they're trying to go after certain consumers or customers that pay more per package, and efficiency.
You know, these numbers are all in the face of a tougher economic environment ahead and in the face of an activist investor. So what do these numbers mean in terms of kind of the story ahead for FedEx?
Unfortunately, we're not going to get a lot of details today on the story ahead because they're waiting for next week's big investor meeting. It's their first investor meeting that they've held in 10 years. It's going to be at their headquarters, and it's really the debut of the new CEO. So we're not getting much details today, and probably not even on the conference call today. But they've laid out a little bit. They're looking for revenue quality again, and they're trying to pick up those efficiency gains.
And really a shift taking over from the FedEx founder as of June 1. This was sort of the first report when we are getting a new transition, a new CEO. You mentioned, of course, that meeting and sort of laying out some of the goals. What more, though, are you thinking that we could hear from a new CEO and sort of the plans and the experience that he brings to the table?
I think a lot of people are going to be looking for what he has to say about their two distinct networks. They have an express air network that is completely different from their ground package network, which uses a bunch of contractors to deliver packages for them. In fact, FedEx in that ground unit doesn't own trucks, and they don't have people or delivery drivers on payroll. Those are all managed by their contractors. Some people think that they are going to try to move more packages from their express unit to that ground unit, which tends to have lower costs, and eventually combine those into one unit. UPS, their big rival, has one network only, and there's a lot of efficiencies that they get from that.